par with the direct tax provisions, but unfortunately it's a very, very discouraging move in terms of just to bring it in parity with direct tax, but yet another disallowance of credit. Clearly not in line with the objective of GST. Now, none of these changes will be rolled back. All of us know it. Year on year, month on month. In fact, budgets these days for indirect tax professionals are not very significant. We have to probably study throughout the year. The GST Council meetings play a very important role. And every month there is a notification or a circular that you have to go through. Your books become useless within 2 months only. You have to go buy a new Bear Act, and you have stopped buying books because you know that there will be a change. So, because of that whole simplification of compliances that one was hoping, and to make in India a success, the only way that can be done is to make the law static. There cannot be so many frequent changes. The investors, they don't want so many frequent changes. They are too worried about Indian tax laws changing every now and then. There is a judgment which is causing a problem when there are retrospective amendments that are brought about. But it's not just that the government is looking at getting more revenue to itself. It's not true. The good part is that the government is listening. Even if we go back to the 48th GST Council meeting discussions, there are so many suggestions that were, or the matters, critical matters represented by industry that were discussed, and they were taken up, and now all those notifications will be issued. And some of the matters particularly discussed in the budget, the decriminalization of offences being the most important one, and OIDAR related clarifications, all have been addressed. So the fact is that the government is listening, which is of utmost importance. One should not forget government is spending a lot of time to collaborate with industry and see how the law can be stabilized. The only thing that needs to be plugged is reduce the number of amendments, though it is unlikely because of the fact that there are inherent problems in the basic structure of the law that was issued probably in a rush, and it will take time till we make these changes and streamline it. So industry and associations will continue to represent and seek redressal to their issues faced under both GST and customs. Until then, we all have to just keep waiting till the time GST really settles down. So that's all from me. I'm not touching upon the rates since Mr. Srinivas really covered all of them. Thank you so much.
So, can I request Honorable Guest Murari sir to be on stage, share your expertise on the union budget.
Thank you, Amrit. Good morning, and since I'm a new person for this place, so I have learned this, Kalai Vanakam. So, good morning to everybody, and particularly the dignitaries sitting on the dais, Mr. Ganeshan, Mrs. Gunjan Pravakaran, Gautam, and Amrit. No, you are younger, so I can call you Gautam and Amrit. Good morning to everybody, and friends of the members of the FICCI, and the friends for the media and the local press. And I should not mention the name of Mr. Sudarshan, who has given me the opportunity to be here and stand before you. Since I am not an expert on the taxation, but at least as a taxman, whatever and what I have understood, the budget, particularly related to the direct taxes, I will just deliberate upon some of the things which concerns to most of us, not all, and which is easily understood. There are certain changes which are not beneficial to we call it SAC, like assessee means all the person who are filing return of income. But the chartered accountant, they may be knowing that assessee is a term in income tax we use as assessee. I think Chennai chapter of FICCI is very proactive. I could see he's arranged the very second day. We have got the very little time to prepare it. Even debate and deliberation is going on right from the evening study, and we have got a very little time. But in the little time, whatever we have understood, I will present a very small thing, because technical session, the chartered accountant, they will take you in the afternoon, I suppose, in the afternoon. Yeah. So they will deliberate upon that thing. We know that this is the 5th budget of Honorable FM. The economy has rebounded from the COVID of pandemic shock, but the Russia and Ukraine conflict has triggered the inflationary pressure. The Indian budget has a significant impact on the economy and the business community. With the right measures and investment, we can ensure a bright future for the country and the people. This is what the FM wanted to impress upon it. And in this budget, there are so many changes, so many provisions, and you know that income tax is it has been made, it is not, but it has been made as a very dynamic act. Every year, every budget, there are so many changes, and it is deliberated upon days together and sometimes months together. And some of them are very technical, even we are very difficult for understand, because the section itself becomes so long with the change over a period of time, with the proviso further. I think those who are the chartered accountant, they can appreciate more, and it becomes very lengthy. Sometimes what the sections wants to say, we forget after reading the proviso and proviso further. so I think but we have to deal with it. There are certain points which I would like to bring before you. See, the budget, the madam has told, and he is trying for the last 2-3 years. So each of doing business, and for that he changing so many small sections, tweaking sections, bringing new administrative some conveniences, so that the business can be easily done, hassle-less. So one of the ease of doing business is PAN has been made as single identifier. This is a very important thing. Currently, enterprises or all the persons, they used to have so many of identity like PAN, DIN, ESI, everything is there. Now, what we are supposed to do, all the enterprises or person, we all have to take the PAN, and PAN will be the single identifier, and it may be done with the KYC and all DigiLocker, everything, it will be done with that. So that may be dealt in detail in the later sections, but PAN has been made single identifier, and it will be effective from the maybe after April 2023. So this will also lead to the corporate compliance and risk profiling. The government is also linked with this PAN with the corporate compliance and risk profiles, and all business establishments are required to have now PAN, and PAN will be used as a common identifier for all digital system. This is the first one. Second one, which we all have deliberated and most discussed, is the new tax system. The government has brought it. The government intention is to bring simplicity in the system, and the government has proposed to cut highest surcharge rate of 25% from 37.5% under new tax regime where the income is more than 5 crores, and the government desires to make tax structure simpler and more attractive. It has proposed to make new tax structure as default tax option from assessment year 24-25. But it may be noted that this has not been made mandatory. Like still the old system will continue. So far, in the future what they are going to take the action we don't know. But so far it has been stated in the budget that option will be with the person to go for the old system or the new system. But new system will be applicable from the assessment year 24-25, means financial year 23-24. And for that purpose, the sections of 115 BAC of Act has been tweaked. The scheme has the benefit of greater rebate and smaller slabs. The income tax rebate is extended on income up to 7 lakhs in new regime. It means that there is no tax to be paid if someone income is up to 7 lakhs. If income is more than 7 lakhs, then he has to pay according to the slabs. And the new slabs, and this may be noted as only for HUF, AOP and UF. This is not for the corporate and other assessees. And the new tax structure is, like we all know, 0 to 3 lakhs is nil. If it is 3 to 6 lakh, this is in condition when it is exceeding 7 lakhs, these slabs. 3 to 6 lakhs is 5%, 6 to 9 lakhs is 10%, 9 to 10 lakhs is 15%, and 12 to 15 lakhs is 20%, and 15 lakhs is the maximum margin rate is 30%. Yesterday the question was asked to the FM that why this has been brought media, when she was interacting with the media along with the secretaries, and she has asked one of the secretaries to answer why this scheme, new tax regime has been brought. So Revenue Secretary has answered that if you look at the corporate taxes, 60% of the corporate taxes is coming from the new scheme where there are no deduction or there are no exemption. And this cue has been taken from that. If it is become simpler, if it is it will attract more people, because government has brought this scheme, somewhat this scheme from the last year, but there are very few takers. So government wants to shift to the new tax regime. For that purpose, it has to be made attractive, and for the bringing some attractiveness, some tweak in the tax structure has been given. But there are debate in that also. Many people, they are saying if new structure is coming, then there will be less incentive for the going for the tax incentive. Like we are saving some for the future, PPF and ATC deduction, ATC investment we are doing it. So what will happen to that? But immediate reaction is that this will lead to this will result in giving more consumption power to the middle class income group, as they could spend the entire amount of income without bothering too much about the investment scheme. This is the thinking of one of the section of the government. But for future, there is no incentive for the saving. There will be no saving scheme linked to this. So still, it is for us people to decide it whether we should go for the new tax regime or we should stick to the old regime. We have to see the pros and cons, and we have to decide accordingly. One important change had been made in the section 54 and 54F. This is the limiting the rollover benefit claimed under section 54 and 54F. Let me be very clear. If this section is related to the deduction on capital gains arising from transfer of long-term capital asset, if within 1 year before or 2 years after the date on which the benefit took place, or purchase any residential property in India, or within 3 years after the date constructed any residential property in India. But the primary object of this section was to mitigate the acute shortage of the housing and to give impetus to the housing building activities. But it has been observed that many people, they were claiming huge deductions. The many people, they were using huge deduction on residential houses, and the government has felt that the purpose of this section is defeated. So now the government has capped that there cannot be more than deduction in by this section 10 crores. Suppose somebody has earned long-term capital gain of 10 crores and above, but this will be limited to the 10 crores. We all know that we sell one residential houses and we invest in another one. This is for purpose. So it has been kept at the 10 crores. So this may be targeted for the high net worth in individuals, maybe very few. For the private sector's salaried employee, there's a great relief for the leave encashment. Since 2002, there was 3 lakhs where exemption was there for the leave encashment, but this has been increased to 25 lakhs as exemption on leave encashment on retirement of non-government salaried employee. This is a welcome change, and this I thought we should share it because we as a government servant we are getting it, but as a government non-government salaried people they were not getting it. So this was not a just. So government has done away with the earlier thing, and it has basically seeded with the government employees what they were getting the benefit out of that. To reduce, there are some administrative changes also to reduce the pendency of appeal, because we know that there are lots of litigation in income tax, many income tax. We may be reading in the newspaper that maximum government is the most income tax is one of the most litigant department, because there are small points also where the SSC also goes to the litigation, and department also goes to litigation at the ITAT, High Court and the Supreme Court. To reduce the pendency at the first appellate level, CIT appeal is the first appellate level, and to reduce the smaller cases, we all know till 2000 there used to be DC appeal, DCIT appeal. Now that time it has been done away with that. Now government has again brought a new quasi-judicial authority as a JCIT appeal. But the purpose and the work of this JCIT appeal will be to dispose of smaller cases, because they are junior to the Commissioner of Appeal, so their jurisdiction will be the disposal of the smaller cases like 143, 1A and other things which is pending for the long period, and we people don't get the refund because most of the returns are processed online. So there are certain things the computer or the system does not take care of, and it is not addressed there. So it has to come back. It is called the pushing of the returns. So those returns are pushed to the department, and it is come physically online. It comes to the department, and departments and then issue the notices and they give the opportunity to the SAC. So to reduce that, this is a welcome change. So I wanted to share with this, whoever the cases are smaller cases. So we hope that the cases, smaller cases will be done speedily, disposal of the smaller cases. And there's good news for the startups also. Like I don't know how many are people who are from the startup companies and all this thing, but date of incorporation for income tax benefit to startups is extended from 31/3/23 to 31/3/24. One more year has been given, and proposal is also made to provide the benefit of carry forward of losses on change of shareholding of startup from 7 years to 10 years. We may notice that when there is a change in the shareholding for the public company, this carry not non-public company, this provision is not there. But this exception has been made for the startup companies only. See, income tax department is rapidly changing, as we know that the interface has been reduced to the minimum and becoming the taxpayer friendly. And in this role, the FM has also pointed out certain things, that CPC, Central Processing Center, where all returns are processed, it has become very fast, and it is mentioned that 45% of the return of income of the portal is processed within 24 hours. You may be surprised, even I'm surprised, we are getting refund within 2 days, 3 days, which is, which is shocking sometimes, we don't know. We think, from where this money has come, then we come to know, this is income tax refund. So this is a welcome change and we should be, happy about it. An average processing period has also been reduced from 93 days to 16 days because of the technical advances. We all, so in the process of the devising new ITR forms, I think many people from the Chennai maybe in the subcommittee, maybe no, I think beta version have already been come on the net to give your suggestion and all things. So I request and urge if you have any suggestion to please share with the respective email or whatever has been given to it. So it will benefit it. In spite of that, vetting comes and then we'll say this has to be done, this should be done, this should be done. So before that, we can suggest. It will be beneficial and it will be easy to take decision in considering all this point. And last but not the least, I'm very happy and very proud to share that Tamil Nadu and Puducherry has collected almost 1 crore tax as income tax and corporate taxes, and I'm going to announce, because my principal CC has told me to share with you that it may exceed 1 crore and 1,20,000 crore and may surpass the collection of the Delhi, and we may come at the second place. This is a great pride and proud announcement. So let me compliment you, let me compliment the people, let me compliment the enterprises, industry and people of the Tamil Nadu and Puducherry. This shows the robust economy of the Tamil Nadu, and the secondly also I may say that this is honest declaration, honest of the return which is coming in the Tamil Nadu and Puducherry. So with this note, because there are so many other things which may come and all this thing, but on the behalf of myself, my principal CCIT, Mr. Ravi Chandran, and the Income Tax Department, I wish all the people, enterprises, businessmen, and everything a very happy, constructive, productive years ahead. Thank you. Thank you very much for giving me the opportunity.
Thank you, sir, for the wonderful speech. Now, to conclude this inaugural session, I would like to invite CA Amrit Lal, convener, FICCI Tamil Nadu Finance Taxation, to deliver the concluding remarks.
Thank you very much, Sudarshan sir. Once again, happy morning. It gives me a great pleasure in organizing such an event immediately post one of the most critical union budget. We were all waiting. So budget is one document where every year, at least the auditors are always on the edge. Whatever happens, even the officers, what will happen? And there's always a question from the salaried people as to, will there be a tax rebate? So that's a common question. And first of all, let me thank Mr. Krishna Murari ji for summing up briefly on all the income tax and key changes. And I'm sure it will be really useful for all the startups and companies. I would also like to thank Mr. Ganeshan, the Vice Chairman, Trivitron. I would especially want to thank Mr. Gautam from BDO, who have been a good friend, and who we have made it possible as BDO has accepted to be as a knowledge partner with FICCI. And I'm sure this is one such event where we would always want to partner with a company where they are very transparent and unbiased in terms of whatever is the opinion. Because in the end, whatever is the budget, what matters is how we interpret, right? So that's what is very, very critical. And I'm sure BDO, being one of the largest accounting firm and audit firm, specializing in consulting over 160 countries, I'm sure we would like to hear a lot about you from your team as a global perspective and India perspective. I think that's where your knowledge would help all of us in terms of where India stands in par with the global standards. how our tax rate are different and as per the global, only then we'll be able to visualize where we are at this point of time. And I thank Ms. Gunjan Prabhakar, the partner and leader of Indirect Tax BDO. And I'm sure when it comes to indirect tax, GST, we all know every day there is a new act. There is a new law, new amendment, new notice. You call it circular, you call it press release. There are so many ways. We all think that there is only one amendment. There is nothing like that. If you see one amendment, there will be so many sections, subsection. So I'm sure indirect tax is one such area of this budget. Maybe finance minister had not spoken much in the budget, but if you see the finance bill, I'm sure there is a lot of minute amendments which has come in where there is a small ease in operations thing. And I would also thank Mandalika sir, the principal commissioner of GST, who had also spoken. He's not here. And to start with, in terms of union budget, there is always a question everyone asks: how was the union budget 23-24? So, but if you look back the history in 1947, do you know how much was the budget expenditure at 1947? How much do you think? Any guesses? 1947, what was the expenditure budget? Okay, I'll tell you, it was 197 crores. 197.34 to be precise. That was the expenditure budget. But looking back now after 75 years, our capital budget, capex budget alone is 10 lakh crores. So if you compare and see how far we have grown, I think we would definitely like to appreciate all the great efforts and all the policies and export policies and various procedures what we have been following. And yes, there is a long way to go in terms of ease of doing business and bringing down the cost of doing business in India. But yes, good measures have been taken in terms of GST measures and income tax measures. If you see the slab rate change up to 7 lakhs, there is no income tax. On one side, we would always say, yes, from 5 lakhs to 7 lakhs, there has been increase, there is no tax. On the other side, it doesn't mean that you should not start saving. You should not do investments. So, government will never promote that you should not invest. What it says is, we'll give you some exemption where you take back more money, where you can also invest, but you need not take care in terms of taxation. So, that's what the objective. So, we all, as auditors, we also like law, because that's where you interpret. So, intention of the government is what is important than the content. That's what we all have heard. So, in terms of that, definitely it's been a balanced budget. We have got a lot of opinions. There is always a saying, ஒரு காயினுக்கு ரெண்டு சைடு இருக்கும், both sides. So, the budget is also the same thing. There is always a positive, there is always a other side to it. So, what we need to look at it is where we stand, and as the Amrit Kal budget is there, we are focusing on a long-term growth. So, when you focus on a long-term growth, there is not too much of focus in terms of cutting down on too much of giving rebates. But yes, I would appreciate various measures in terms of agriculture development and creating a tribal fund. I think for the first time I have heard special focus has been given for the tribal people and to build those tribal people and make them entrepreneurs and build their startups. So I think first time the focus has been on tribal and other people. So this shows the inclusiveness in the government in terms of building those profiles. And yes, a lot of technology improvements. We have seen Center of Excellence being launched. Okay, in terms of again this time we have seen which sector got the largest share in terms of budget. Any guesses this time in the budget? Which sector got the highest share? No, it was the defense. Okay, so more focus has been given towards defense and railway and connectivity, and more of technology driven and make in India. That has been one motto where a lot of domestic manufacturing capabilities enhancement, capex investment is going on. So I think overall it's been a balanced budget. keeping in mind this global scenario, this job cuts we have seen various places, keeping all in mind, the balanced budget will help us in terms of generating more jobs, more employments, in terms of rural development and in terms of agri development, and in return there is a long-term benefit. That's how I see. And thank you very much once again for Fiki for giving me an opportunity to hold this event, post-budget analysis. And I'm sure I would also thank the other video representative, Mr. Bala, Mr. Raghu and Mr. Krishnan from the video team who are part of the direct and indirect tax team. Sure, we'll get into a technical session where maybe sector-wise we'll start analyzing how things goes. Thank you once again. Thank you.
Thank you, sir. On behalf of Fiki, I would like to thank all the dignitaries, our Chief Guest Mandalika Srinivas, and also I would like to thank Sri Krishna Murari, sir, for being the special guest for the event. And also I would like to thank all the eminent speakers from BDO, including Ms. Gunjan Prabhakaran, partner leader in indirect tax BDO India. And also I would like to thank Mr. Gautam, sir, for supporting this event. Also, especially thanks to Mr. A. Ganesan, Vice Chairman of Tributan Newberg Group of Companies. Once again, thanks to all, man. And also, before going to the tea break, just before going to the main session, we have some 15 minutes tea break. After that, we can start. Thank you.
எப்போ